The most important number one key to investing successfully is to have a strong focus on sectors. Most successful fund managers, the investors that run your Congress, the biggest, smartest, most informed investors that literally have so much money that they're unable to invest without moving the stock market, they all tend to have a heavy focus on sectors. I'm Chris Rowe, and if you don't know me by now, over the last 25 years, I spent about 80% of my time obsessing over market analysis and money management. I founded a fund, I founded investment research firms, and money management firms. So basically, I'm qualified to explain what works. Today, I'm going to show you what my secret has been the entire time. So that goes back to 1995 until today. So it's actually 27 years. The secret to profitable trading and investing is not some gimmicky system with some made-up name to sell you stuff. The secret to profitable investing is to be able to clearly see the market. And most people don't have the skill yet of being able to clearly see the market. So most people fail at trading or investing. I had the advantage myself of working on Wall Street for about a decade, operating what was then some of the most sophisticated trading technology. And I also had mentors. Some of them were Wall Street legends, and they all taught me the same thing from the time I was just a kid working on Wall Street, and that is to focus on the sectors. So let's dive into this. The key, like I said, to profitable trading is seeing the market clearly, which means that you need to have a framework for categorizing stocks into sectors or industry groups. And once you start to group stocks together into sectors, everything becomes more clear, and the strongest areas of the market just start to reveal themselves. This is so beneficial because fund managers buy groups of stocks to spread their money around so that they have the ability to exit their positions without that selling pressure actually pushing down the price, causing them to get a bad price for the stock that they've sold. So let's pause here for a second, because to fully appreciate the reason why sector investing gives you an edge, you need to really consider who it is that's trading sectors. It's the most well-informed investors, because investors like that trade groups of stocks, buying 100 stocks in the same peer group with just one push of a button. You don't want to follow investors who are even able to benefit from buying one stock, because if that's possible, then they're not managing a lot of money. The biggest of the big money players are the players in the stock market that are most likely to be right. You have to know that. You have to know that the folks that have all the money at the top are the ones that are moving the stock market with their trading. So it's easy for us to really see what the elite are buying and selling. And if they have so much money that they're buying and selling actually moves the markets, they're not the type of investors who buy on a hunch. One reason why you want to use this sector edge is because you want to follow those players, essentially riding their coattails, and they're moving sectors with purpose and not in anticipation of some short-term event. They're so big, they're actually forced to make their wagers not on whether a single stock is going to take off on some earnings announcement or something, but on what the world will look like next year. They have to buy and sell sectors, entire industry groups that'll move because of major global economic changes. So you want to follow these players because they often literally know what's going to happen next, or they make it happen. The elite stick together. They're going to help each other succeed, and they have the power to return the favors in a big way. So they always get the best inside scoop, and they can always afford to buy the most expensive, best research. They spend tens of millions of dollars to know what's likely going to happen next. They're the ones that see to it that their investments actually do pay off. All right, they have so much money and power. They can get laws initiated and changed. They can control the future. So follow the wealthiest investors, and you'll make money. They have the most money because they're the most successful at investing, and they're the most successful at investing because they have the most money. So the key here is that the wealthiest investors are forced to buy groups of stocks like sectors, not individual stocks. So now that we've considered why the wealthiest stock market movers are likely the best ones to listen to, note that they'll never tell you what they plan on doing or when they're doing it. So I want you to remember this one thing for the rest of your life. Information shows up in price behavior before it shows up in the news. So focusing on sectors is going to give you a huge edge for trading the stock market. Clearly seeing and understanding how the sectors are behaving will help you in multiple ways. Your timing, your understanding of the market's condition, and your allocation. So to time your trades better, buying and selling the right sectors and using the right indicators that you can easily find online, you can see when a sector like the healthcare sector is overbought and heading lower, or oversold and heading higher. Most stocks that are members of the same sectors, like biotech stocks or software stocks, will trade in unison. That is, they move like schools of fish. And that's because, what I mentioned a few seconds ago, large fund managers spread their money around. They buy lots of stocks in the same group. So instead of betting that certain semiconductor stocks like Intel, AMD, or Nvidia are going to trade higher, they're forced instead to bet that semiconductor stocks in general are going to trade higher. So they buy 50 semiconductor stocks or 100 all at the same time, causing the whole sector to move higher. These large buyers have so much money that they're actually spending months or even years building their position, owning the amount of stock that they want to, causing the uptrend, and that's why it's steady and consistent. You can time your trades better by focusing on sectors first, betting on what the school of fish is going to do instead of betting on what each individual fish is going to do. It's just plain easier to see what the group is doing as a whole. And that helps you time your trades in a sector fund like SMH, the Semiconductor Sector ETF. If I want to buy Intel or Nvidia, for example, I first focus on the timing of the entire semiconductor sector. Sector behavior reveals when there's elevated risk of stocks falling or when risk is unusually low. So for example, you can see when certain sectors, which are considered to be low risk sectors, are also known as safe havens, flight to quality sectors, defensive sectors, you can see when they're becoming the best performing groups. So think about it. When the safe sectors are gaining interest, it's because the most powerful investors in the world think it's time to reduce risk. So stocks are likely headed for a decline. It's important to know that fund managers have mandates, rules they must legally follow. So investors in their fund are assured that they invest the way the fund states they're going to invest. And most mutual funds aren't even allowed to have that much cash on hand, maybe like 5 or 10% max. So what will they do when they think the market's going to crash or correct? They hide in the safe defensive sectors. So when you see those safety sectors outperforming the others, you know that smart money is becoming risk averse, and you should be too. So what are the flight to quality sectors? Sectors like utility sector, which is comprised of gas and electricity companies. You can track this sector with XLU, for example, or healthcare stocks like Pfizer, Johnson & Johnson, United Health. You can track that sector with XLV. Or the consumer staples sector, comprised of companies that sell products that people buy in any type of economy, like Palmolive, Colgate, Coca-Cola, Walmart. You could track this sector with XLP. So when these sectors are the best performer, usually trouble looms ahead. And for the third important reason that you want to use this sector edge, most importantly, you'll focus your investments only on the top strongest sectors of the market, while keeping your account clean and free of those ugly sectors that are weighing your account's value down. And one of the main reasons individual investors don't perform well is they put too much emphasis on market timing or timing their trades. But meanwhile, focusing on what you're invested in is way, way, way more important than market timing. You think about it. Is it better to perfectly time a trade that goes from its low to its high by only 10%? Or is it better to generally buy somewhere near the low point, kind of, on something that goes from a low point to a high point of approximately 100%? I mean, would you rather capture all of the 10% move or just half of a 50% move? It's more important to be in the right thing than timing the market. Also, much easier to do. Another sector edge that actually is my favorite one that I touched on earlier, the fact that trends are reliable, they stay intact for many months, often several years. If you think about it, at the time of this recording, the strongest major sectors out of the 11 major sectors out there in the stock market is the energy sector. And as you can see here, energy is the best performer in the past 1 year, up 49%. Over the past half year, up 34%. Over the past 3 months, of 18% upside. And 1 month performance is 8%, or actually more. It's by far and away the best performing sector, and that's nothing new. You could have figured this out easily just by watching how it behaved coming off of any low point since the COVID crash in March 2020, 2 years ago. You could have seen the sector showing huge outperformance off of the low, gaining 98% when the second best performer gained only 56%. And if you were to look at every major low that all these sectors hit, every time they launched off that low, the energy sector had a much more explosive launch off of that low, showing its superior strength every single time. We don't need to know the reasons why this is happening. We just need to know that the sector is certainly in favor. And sector trends aren't random. These are mega trends created due to seismic shifts in the global economy that are triggered by supply and demand of oil or agriculture, or changes in laws, changes in power, who controls various nations or groups, by huge trends like war, money supply, changes in interest rates, how much money the Federal Reserve is printing, and things like that. These big reasons have multi-year inflation where energy and all prices are going up. But the story behind the reason for the price movement is just a mere distraction from what's important. What's important is the sector's going higher at a faster pace than other sectors. So buy it, because that's going to last a very long time. Remember what we said, the smartest investors have so much money that they have to buy lots of stocks in the same group, but also keep in mind that they have so much money that it takes them months and often years to finish building their stock position that they want to own. In order for this investment to make a real dent in their fund and the performance of their fund, they have to buy large quantities of it, and that takes months or years to build. I remember when I was trading at a mid-sized brokerage firm and I was trading on the firm's desk, and it would take us weeks and weeks just to build our position, sometimes months just to build our position in any stock. So you can imagine what the $100 billion funds have to do just to build their position. That's why it takes months, years. That's why the trends in sector funds are so reliable, so consistent and steady. And that's one of my favorite things about investing with a sector edge. The energy sector trend began 2 years ago, and it's only gotten stronger. The baton was passed to the energy sector from the preceding leader, the technology sector. They overlapped in leadership. Tech remained the strongest sector for 5 years, beginning in 2016, was among the strongest sector even in the years leading up to that. So the baton was officially passed to technology in 2016. And which sector do you think dominated before technology did? With Obama in office, it was the healthcare sector. The government's focus was attempting to fix the healthcare system, if you recall. When the general stock market, the S&P 500, went up 13%, the healthcare sector went up 35%, almost 3 times as much. Meanwhile, if you were more specific and you looked for the fastest moving part within the healthcare sector, you found this biotech fund gained 117% in the same exact time frame. So that's another thing. Don't you dare think for 1 second that sector investing is boring, because it's a basket of many stocks averaged out and diversified. I mean, these sectors can go up several 100% in 1 year, more than most stocks gain in 1 year. There's nothing lame about big gains, especially when you've eliminated the single stock risk of one single company. I can go on and on about this, but I'll stop here. Starting to trip on my words. I was lucky enough to have mentors when I went to work on Wall Street when I was only 17 in 1995. The day I started, Dylan Giovanni told me to focus on bank stocks and insurance stocks. It was like everything this guy picked ended up tripling or being bought out before they had a chance. Not to discount his genius, but the focus was on sectors. He then told me to focus on biotech stocks and tech stocks, and the dot-com bubble was just getting started back then. So yes, I was lucky on when I got started, and now you're lucky enough to see this video from an actual money manager of 26, 27 years, instead of these YouTube hacks all over the place who never managed any money before. If you like this video, by the way, please help me work those YouTube algorithms and hit that like button. My goal is to help all individual investors understand the market better so that all the profits stop going to the top 1% wealthiest people on earth. So if you want to help that effort and help regular people be successful in their investing, share this, like it, leave a comment. I'll try to reply to you. Most importantly, subscribe to my channel, and I'll bring you more cool tips and tricks, and you'll have a real deal investor like me in your corner. I'm Chris Rowe, and so can you. No, seriously, if you want to follow me anywhere, my handle is Chris Rowe Trader, but definitely sign up or like or share or subscribe. Thanks a lot. I'm Chris Rowe with True Market Insiders. Take care.